Welcome to another episode of the Mike and Matt Show with myself, Matt Weber, and my partner and co-host, Michael Strassen. This podcast is designed to help provide insight into the world of real estate investing, entrepreneurship, personal development, and business. Please subscribe, follow, and like the Mike and Matt Show on all podcast platforms. You can listen and watch the show on our YouTube channel, Alpha Funding. Be ready to level up your life and be inspired by some of the most successful investors and business professionals in the game. You'll laugh, you'll learn, you might cry. We hope you enjoy the show. We are back. Welcome back, Mike, for season 2 of the Mike and Matt Show.
Welcome back, Matty.
Yeah, look at this set right here. Does anyone, if you're watching on YouTube, I know this is, Mike always says in Radio Land, it's not the best thing to say, but if you are watching us on YouTube, we have a brand new set here at the Mike and Matt Show. Do you see our bobbleheads?
Yes, that one looks like me. I don't know who the other person is.
That is me, by the way. Jenny from China created these, and I think they look as real, as lifelike as possible.
Jenny lied to you.
Yeah.
I'm being serious. She lied to you. That's not you.
I want everyone to see. We did put this up on our Instagram page for you guys to vote who looks more realistic, Mike or Matt, but we have some big things to share with our audience here today. We are here and back in the studio for episode 1 of season 2. We have a fantastic host.
Mike and Matt Show, the sequel.
Yeah, we're back. So we didn't get canceled. Apparently.
Not yet. Matt might say something later in season 2 that will cancel us, but who knows?
Yes, but we have a special guest. Mike, you want to introduce our guest?
Absolutely. I want to introduce the one and the only Rich Domanico from RMS Title Appraisal. Rich co-founded RMS in 1998 along with Mark Colazzo, one of our partners here at Alpha Funding. He also co-founded RMS Title Services in 2004. He's been a state-certified residential real estate appraiser and licensed title producer. He's been doing this for over 15 years. I feel like 15 years is too small.
It's 25.
25? And you got to...
25 now. We got
to get that updated.
It says 15 plus, doesn't it, on there?
It says over 15.
Over 15.
But that's like a low ball.
That's true.
We're a little low ball here.
Yeah.
But here he is. This is Rich Domanico. Rich, thank you for joining us on season 2 of the Mike and Matt Show.
I finally made the big time. The Mike and Matt Show.
This is the first episode of our season. We thought, what better than to kick off 2024 with an unbelievable guest. You have such a pedigree, you have experience, knowledge, and also you work in a specific sector of the industry that I think a lot of real estate investors find, I would say, sometimes a little bit
elusive,
challenging.
And what we're going to do is we're going to dive into that topic today. Great. You are a appraisal company. You also have a title company. You were an appraiser. So there's so many things.
I'm an appraiser.
You still are an appraiser.
Legally.
Yeah. I'm legally still a personal trainer, everybody. So if you need personal training, I'm always here.
If I do well, can I get my own bobblehead, though?
Yeah,
The question is whether or not it'll look like you.
We can make this the Mike, Matt, and Rich show.
I like it.
I want to start off with, and I want to start off in season 2 with this segment at the beginning. Whenever we bring on a guest, I want to know, in your own words, who is Rich Domanico?
That's a good question. All right, I'm gonna do one word: passionate. I'm very passionate in whatever I do. You know, sometimes it's a blessing and sometimes it's a curse. I'll give an example. Growing up, I was a huge fan of the NFL draft. I don't know why. I was enamored with it as a 11-year-old. I just got into it way before people even cared about the NFL draft. Well, I had like a huge board in my college dorm with like stickers on it with all the different players where I would rank them. I still do it. I watch hours and hours of tape on these players and waste so much time. But in business, it helps me because, you know, anything I do in business, I pretty much take everything in and want to learn as much as I can, whether it's operational or about appraisals, or just recently I've been getting into investing in short-term rental properties. So this past year, I dove into that head first. If you could ask Mark, anything. Years ago, Mark wanted to do a fantasy baseball league. I don't like baseball. I don't know anything about baseball. He signed us up for this fantasy baseball league and said, Rich, you know, you do it. You'll figure it out. I'm like, all right, when's the draft? He said, tomorrow. I spent the entire night learning about fantasy baseball, and we won the league. Wow. So that's just how I am with everything. I just kind of dig into it as much as I can.
I didn't even know he likes sports.
I don't think he does.
Okay.
Well, although somehow he's an Eagle fan now.
He's competitive. Mark,
he is competitive.
I
competitive.
think the best way to put it is the common denominators. He's a very competitive guy, and I can see with you, with your passion, that's probably why you enjoyed that fantasy baseball league. You were just competitive and you wanted to win.
Absolutely. I think passion is I always like to come back to themes now that we've gone through a season and we're back in the next season. And I think thematically, as we bring people on and we look at entrepreneurs and we look at what they've done and, the way they talk about it, I think if we were to do a word chart of what people say on this show, I think passion is a big one. And I think that's really interesting because I think as we're talking to people, especially successful entrepreneurs, I think there's something to that. There are good businesses, there are profitable businesses, there are businesses that will make you lots of money and do all these things. But how successful can you be at them if you don't have the passion for what you're doing? And I think we keep hearing that as we go, and found it so interesting that the word you wanted to use was passionate, because I feel like it's such a through line through a lot of people we've had on this show and just a lot of people out there who love what they do and have built really successful businesses, the passion part of it.
Yeah, I think you have to be passionate. Sorry.
Yeah, no. I was just going to say, what I was going to say is my word is love. I think people always say you have to find something that you love to do. And I'm a big believer that you have to learn to love what you do. And I think also passion, if you don't have that passion, it's hard to, do those two things simultaneously. Mike, what would be your word?
Determination.
I like it.
Because when you're doing something, and this kind of links in with your other words, you need to be unstoppable. Yeah. There has to be nothing that can, no wall too big, no river too, there's nothing that can stop. So that determination of I want a thing and I'm going to go get a thing. I'm going to go do a thing. And there's
Failure's not an option.
Nothing. There's nothing in between that.
Yeah.
You're just going to get the thing. So
I love
determination.
That. And that's with the Rocky quote. They say it's not the punches that you give, but it's the punches that you can take and keep moving forward. And when you have determination, when you have that passion, when you have love for what you do, you learn to love what you do. You're going to keep going and going and going until you get to where you want to be. And people always say it's not failure. If you fail forward, you're learning, you're growing. With that being said, I'm curious, for all the entrepreneurs that are out there, what is it that inspired you to want to open up your business? So if you could just do a quick little background, how you got to where you are today, and obviously what was it that really inspired you? Because being an entrepreneur is not easy, and it's not, there's not a lot of people out there that are cut out for it. Sure. So what was it that inspired you?
So my father was an entrepreneur. So growing up, my father owned his own sheet metal company. Even though he didn't start out as an entrepreneur, he actually was a union sheet metal worker, worked his way up, eventually became a foreman, and then bought into the business that he worked in, had a falling out with his partner, pretty much took loans out everywhere he could from my mother-in-law, my father-in-law, his parents, and started his own business and really thrived. So I saw that growing up, always that he was his own boss, even though he would never tell me that when I was really young. He would always say he was on the phone with his boss, trying to trick me. But once I learned, that's what he did. And then I worked for my dad, summers for many years. So I always had it in my mind that I wanted to own my own business. That was something I always wanted to do. Freshman year in college, I was roommates with Mark Colazzo, infamous Mark Colazzo, who I'm pretty sure was a guest on the show last year here.
Yep, he was our first guest last year.
First guest, okay. And, as anyone knows, Mark, he's a serial entrepreneur, so we kind of hit it off pretty quickly with that. We even had a small little business in college doing bubblegum machines, which didn't really...
I never knew that.
No. Yeah, but it's because it didn't really do well. We don't talk about that one. We failed forward.
Yes, I love that.
Bubblegum today.
I do.
Okay.
I do. I don't have a disdain for the failed bubblegum business. But, so I still do like bubblegum, yes. So that's really what inspired me to be an entrepreneur. I took a little bit of an advanced route to get there, after college, kind of started work at Merrill Lynch. And, Mark and I always stayed in touch, and we decided one day, let's just open up a business. I started doing appraisals with another company that Mark was working at just to get some income in, and we decided we were going to be property managers.
So I have a quick question. Merrill Lynch, you went from corporate. I also am somebody who came from corporate. Mike, you worked for a big corporate company.
Yeah.
Going from corporate to owning your own business,
it was night and day. Yeah, it was completely different.
Yeah.
But again, I always viewed Merrill Lynch as a stopover until I figured out what business we wanted to go into.
So you never saw yourself as that corporate 9 to 5 or whatever the time is?
Never did. Always said I would own my own business growing up. That was always what I said. Actually, in kindergarten, though, when I was asked what I wanted to be when I grew up, I did say a garbage man. We won't talk about that.
Not a bad deal.
Not a bad gig, actually.
Not at all.
No.
You just answered one of my questions I was going to ask, something that the audience does not know about Rich. He wanted to be a garbage man.
Sanitation.
Apparently, in kindergarten, I wanted to be a garbage man. Yeah.
Okay.
Yeah, sanitation worker. I guess you can't say garbage.
It's a good business. Listen,
It is.
you go to ask the sanitation guys in New York City if they have a good life, and they're like, "We got a good life."
Yeah, we have to have a good.
Yeah, benefits, good pay, stability.
Weirdly good hours.
Yeah.
Yeah.
It's not so bad.
What I also would like to touch on is you are one of the owners at RMS with Mark. Just wanted to see if you could give us a little bit of background on who is RMS, what you guys do, what makes you different from everyone else. Because there's a lot of companies that can do appraisals that are title companies. What makes RMS different?
Sure. Well, first, there's not that many appraisal and title companies out there. So that right off the bat separates us. So we're able to provide both services to our clients, which that's rare. Let me start off by speaking on the appraisal side first. So we cover the entire state of New Jersey. I have appraisers located strategically, geographically competent areas that they work in, so they're not driving all over the state, right? So they're familiar with the areas they work in. But I think the biggest thing that separates us is our back office. We have all appraisals that are done are reviewed before they go out. So a lot of our competitors are more, I don't want to say mom and pop shops, but they're smaller companies, and not that we're so big that we lose the personal touch, but they're smaller companies in the sense that they have maybe one or two appraisers, or it's just one guy doing the appraisals himself. So he doesn't have the oversight of somebody reviewing the work. Your guys have seen appraisals a lot, obviously. There's a lot of data on an appraisal. There's a lot of room to make a mistake. Simply just checking the wrong box, but the number, dyslexic adjustments, missing stuff on the form, missing information. So we're checking that on every appraisal that goes out, which is rare. There's not many companies that have the ability to do that. And we also always have someone to answer the phone. When they call, it's not an appraiser in their car saying, I'll get back to you when I get back to the office. There's always someone there. So from that standpoint, I think we're definitely can offer a better service than most of our competitors can. Title is interesting because everyone does the same thing in title. There's really no differentiator as far as the quality of the work. Everyone does the same thing and they charge the same amount of money because the state tells you what you can charge on a premium. It's not up to us. Yeah, there's little minor charges that people can fluff with, but for the most part, it's pretty much the same. So really, it just comes down to service there. And my team, Lori, who's been with me for years, she really lives and breathes RMS. And I believe that is what sets us apart there.
I have a question about something that sets you apart because, I know a little bit about appraisals and we've been ordering from you for a long time. It's very different. You touched on it a second. It's very different than other types of appraisal companies. So like you said, my personal experience is with either really large appraisal management companies or the guy working on his own doing appraisals,
kind of in between,
who are hired by appraisal management companies to give it to you. And what you guys do is really different. Like you have a company that has a stable of appraisers that they work for you. Like they're not just, it's not like an appraisal management company where you're like, I'm going to pick you today and I'm going to pick you today and I'm going to pick you today. These are people who are part of your team. And like, I find that to be unique. Like I have not seen that model in lots of other places. So my question to you is, what brought you there? Right? It's so different and so interesting that's how where did that shift happen when you go, we need to have appraisers that work for our company, not that we're just managing.
All of our appraisals are 1099 and can work for other people, which they do get some work from other people just when we need that for the state, obviously, for 1099 laws. But I think, and I didn't bring this up when you said what separates us, and I think this is a big one. So we have 18 appraisers. 17 of those appraisers were trainees for us. I only have one appraiser that had a license before he started to work for us. So we trained everyone in-house the RMS way, basically is what I like to say. Simple things like calling to schedule the appointment the day you get the order. the turn times that we expect, 24 hours after inspection, 3 to 5 day business turn time from when we get the appraisal to get it out the door, pending access to the house, of course. So there's certain things that we train them to do that I think separates us also. So, the appraisal management companies you mentioned, they're hiring appraisers all over the country, and all the reports are going to look different, feel different. Not that I don't let my appraisers have, their own personality in their appraisal. Of course they do. But there's just certain things that we expect in an appraisal where they're always going to look the same to the reader. So whether it's, I'll just name some of my appraisals, whether it's Buddy or Al or Cole doing an appraisal for you, you kind of see it and read it the same way.
Right.
And I think that's important.
And like you said earlier, it depends on geography, which I think is also interesting because you go back to the management company model, right? And literally it's who's available, and some of them bid it cheapest. Some of them bid it out. Yep. And it's if I'm doing, so we're in New Jersey, so if I'm doing a deal in Hudson County, I'm always going to get one of probably two appraisers, yep. Right? If where our office is here in Monmouth County, I'll probably get one of two guys, and so on and so forth. It's just so different. It's so different than what's out there. And well,
it's good to hear that.
So, but what was it? I want to go back to, what was it that you said, one day you go, this is the way it has to be. This is how I want it to be.
I would say it kind of happened organically, to be honest with you. When we first started out, Mark and I were doing the whole state, literally the whole state, just the two of us. And then our first hire was Doug, who's still with us, Doug Cowie, and who has an interesting story. Doug Cowie was originally an original band member of the band Trickster. I don't know if you guys remember Trickster back then. I
actually know this because I've spoken at Doug. Also has the best appraisal stories ever.
Doug's got some good ones. Yeah, he does have some good ones. So he was our first hire, and then he started to do Bergen County. So Rich didn't have to drive from Toms River to Bergen County, which was a big help. And then we kind of grew from there based off of, honestly, I didn't want to drive to Salem County, so, let me hire someone there. Now, I will say a lot of the people, of the appraisers that work for us were friends of friends. We hired 2 people that worked with Mark in the supermarket back in the day, Al and Ray, and then some of my fraternity brothers from college work for us. And then we basically look at this, okay, where's our gap? Where do we need an appraiser in an area? Because, appraisal is a volume business. We make money on volume. Not only is the quality of the appraisal going to be better if I'm hiring someone to do the appraisal in an area they live, but they're also going to be able to do more appraisals. Right. The less time they're on the road, the more they can do. So it's, financially beneficial also to have them in geographically competent areas or geographically close areas.
Absolutely. And I can personally say you see it in the quality of what we get. So
this episode is sponsored by RMS Title and Appraisal. RMS was established in 1998, serving clients for all their title and appraisal needs with the experience you can trust.
Love the radio voice.
Love it. He's come a long way in a season.
Yeah. What I do love is you talk about the RMS way, and I do want to quickly touch on this before Mike goes in. Mike has a question he wants to ask you. We believe in that too, and I think a lot of that, this is for entrepreneurs, real estate investors, business owners. You have to have a certain standard, whether it's going to be a low standard or if it's going to be a high standard. We are very, very competitive. We're very passionate. We're determined. You used all the words that we talked about it. We love what we do. You have to have a certain standard, and I think that goes a long way when you talk about what is the RMS way, and it's really about just holding people accountable, holding yourself accountable, having a standard, and I think that's where there's so much synergy between Alpha Funding and RMS. It's just, we have that standard, and I love the fact that you talk on the RMS way.
So my question is a little more abstract, and I'm going to say this because there's a lot about appraisals, and I'm sure you could talk about, and I'll take this moment. Matt will plug it again a little bit later, but we did do a webinar with you in the first quarter of this year. That has a lot of technical details. Matt will plug it a little later in the show with all the information on where to find it. But so I kind of want to take a step back because, I want to, a lot of this show is about entrepreneurship. It's about understanding real estate, that there's a lot of different things we do in real estate, right? But real estate can be extremely volatile. It's an unpredictable business, unlike a lot of other businesses, right? You're building a car, you kind of know your addressable market of cars, right? You're building a widget, you kind of know how many people are going to buy a widget. Tomorrow, the world could be turned over, and real estate could either be amazing or terrible. So my question to you is more about like, what is it about real estate? What is it about what you do that excites you? You've been doing it long enough. You've been doing it 25 years. You've witnessed the best times. You've witnessed the strange times, most even recently as the mid 2000 financial crisis, what that did, right? Then the good times again, then a pandemic, which is completely different than a financial crisis, has its own problems. And now where we are now, and like, it's such a roller coaster, right? Like we're talking in the beginning about passion, about entrepreneurship, we're talking about determination, but you have to look at that string and you have to say like each one of those moments is something that could tank an entrepreneur's business. What keeps you coming back? What is the thing, like, one, when you started doing it, you started a business with Mark, you're doing this, there's a thing that kept you doing it. And was it, I mean, it's okay if it was just money or just something, or was it something more visceral? Like at Alpha, like I love doing this. I'm a deal junkie. I get a thrill by getting deals done. Right. So that's something like it's hard to pull myself away from it. So what was that like? And looking at it over that spectrum of the career you've already had, I'm curious.
Honestly, I think it's what you said. I like the roller coaster of it. I tell my employees all the time, and they know I work harder when it's slow, right? When the industry's bad, that's when you really have to like dig in and figure out, all right, how are we going to get through this? How are we going to get to the next step? That's what excites me and challenges me more so than just real estate exciting me. It's the being the owner, being the entrepreneur, and how are we going to get through this? Not wanting to fail. That's just, failure is not an option. I said that before. And determination, as you said earlier. So I would definitely say that that's what really keeps me going. And you brought up the financial crisis. So before the financial crisis, how appraisals were ordered was completely different than it was now. There were no AMCs. Yes, they were around, but they were not a big part of the industry at all. Appraisal management companies, I don't want to use acronyms, so people may not understand them. Anyway, so we would get work directly from mortgage brokers. Mortgage brokers would order the appraisal. They would tell you what they needed on the appraisal, which you can't do anymore. But that's how all the business was. I would say 90% of the work that RMS got prior to 2007 was from mortgage brokers. Well, in 2007, they came out with something called the HVCC, which stands for Home Valuation Code of Conduct, which was disbanded when Dodd-Frank was put into effect. But unfortunately, a lot of the same rules still applied, where mortgage brokers could no longer order appraisals. So in one day, we lost all our clients. Literally one day. And I remember we were actually, this was after our office burned down, by the way. And we were sitting in Mark's basement because we were working out of Mark's basement. It was myself, Mark, and Jennifer, who's our head of sales. And we're like, all right, what are we going to do? We have no clients.
Can you quickly touch on that? That is
Mike and double whammy, right?
Me and Mike always talk about stories and life. Yeah. What gives life its life are the stories. What happened? Your office burned down? Talk to us about it. So
it was Labor Day. I want to say August of 2007, but it may have been 2006. I don't remember exactly the date. It was Labor Day, though. I was in my backyard. I had a barbecue, and this was before my phone was attached to my hip like it is now. It was, I had like a bar shed in my backyard, and my phone was back there. Now, everybody finally leaves Labor Day. It's Monday, so it wasn't super late. Had a few cocktails, I'm not going to lie. I went and looked at my phone, and I had a bunch of messages. And I'm like, oh. So I called Mark. Mark called me a bunch of times. It went to voicemail. His wife called and my mother called. So I called Nicole back, and she said, don't panic. I'm like, what? She's like, the office is on fire. I'm like, what? What do you mean don't panic? The office is on fire. I'm like, oh my God.
Don't panic.
So now I have to figure out how to get to the office because I can't drive. My wife couldn't drive. Nobody could drive. My neighbor was a fireman. So I called him, so he's going to drive me. Now I'm like, I got to call my mother, though, because a bunch of messages from my mother. So I call my mother up, and I'm like, Mom, I'm like, what's up? She's like, don't panic. I'm like, I know. She's like, your father's in the hospital? I'm like, no. So, pretty much my whole world came to a stop right there. 5 minutes ago, I was having a beer in the backyard, and the next thing you know, my office was on fire, and my father was in the hospital. So.
And then, not so long after that, you lose all your clients.
Lose all our clients. So we literally, this was on a Monday. By Tuesday morning, we were fully operational in Mark's basement. No one from the outside world would know that our office had burned down. office didn't burn down. There was mostly more smoke damage than anything. But Mark happened to be friendly with the arson investigator. He went in and got our server out.
Oh, wow.
So we were able to have our server. We were set up. We worked in Mark's basement for a year till we built our office in Lakehurst. Actually, probably a little over a year. It actually wound up being a blessing in disguise because we didn't have rent for a year when we lost all our clients. We got money for the fire from insurance. So it kind of all worked out. The money that we got from insurance helped us, keep us afloat until we figured out how to get clients again. And how did we get clients? So at this time, now AMCs came up, the appraisal management companies kind of took over the industry because the big banks, now the mortgage broker couldn't order the appraisal. So let's say they were going to go Wells Fargo. Wells Fargo doesn't want to deal with appraisers all over the country, right? So they would go to the appraisal management company now. Well, appraisers didn't want to use appraisal management companies originally when it first started because they were losing half their fee. Right. So they were charging $350 and now they're getting $225. So myself and Jennifer went to a meeting with all appraisers. It was kind of like I don't even know what you would call it, but it was like everybody just got in a room and just everyone was basically trying to form a union, said they weren't going to do the work. And I looked at Jen and I said, you know what, Jen? They're not going to do it. We are. I said, we're just going to do more work for less money until we figure it out. I said, the fees will come back eventually. And that's what we did. And honestly, we didn't lose money that year.
It's a really incredible story because we're going to go back to the entrepreneur. That's going to be a big theme is this moment of like, you have all this adversity, you have all this change. And I would say almost every human in this planet is super adverse to change and nobody likes it. Nobody likes when things are different. But you dig in and you find the next thing, right?
Evolve or die.
And so I'm going to take one step back to that. Is there something about what you do? So being an entrepreneur is the drive. You love running your own business, but is there something about the business itself?
About the appraisal business?
Yes. That's made you go, I want to just keep doing this because entrepreneurs you can be a serial entrepreneur. You look at Mark, he's got all these different businesses, right? But, for some people there's for you, 25 years later, we are still doing appraisals. You're doing title. What is it that, is there something that draws you into it where you're like, I love this business?
I think every appraisal is different, which is exciting. I don't do the appraisals anymore, but I still review appraisals. And typically I'm only brought in to review the difficult appraisals. Right. So I do enjoy that. That's a challenge trying to figure out, what the appraiser was missing or how we can come up with the correct value on that appraisal. So I do like the analytical challenge of that. I just like real estate as a whole though, because to me, and that's why I'm getting into the short-term rentals. I just like the fact that there's so many different ways people make money off real estate, right? Within one deal, right? You have a title company, you have an appraiser, you have a lender, you have the investor, you have the home inspector. There's just so many different ways, that people make money off real estate, and that kind of excites me in its own way. How can I be a part of that and learn more about that and make more money that way?
And also what I love about that is that everybody benefits or everybody doesn't benefit. Mm-hmm. When a deal dies, everybody doesn't get their money. And then when the deal does,
definitely not in title, that's for sure.
Yeah,
appraisal we usually get paid whether it closes or not. That's a bonus. But
you guys are made guys.
Yeah.
They always get paid.
Not title.
We're always getting the check.
Yeah. Usually, sometimes we get stiffed, but
it's just so interesting, and that's. I feel for people listening, like why people are listening to us and they want to listen to these conversations. Is I bet you there's a lot of W-2s listening to this podcast. There's a lot of people who are entrepreneurs who are maybe in the beginning of their entrepreneurial career. And it's like this interviewing people like you and these kind of stories is like, hey, it works.
I also think, I've had very fortunate to have employees that have been with me for a long time. So, I like to give them a little shout out, Matt, Lori, Lisa, Jen, Amanda. They've all been with me for a long time. And, they're like part of a family. And even my appraisers, most of them have been with me for a long time. So I want the business to be successful so they're successful too, right? So they continue to prosper. So I think that's also drives me to keep things going, not just for myself, but for them.
I love that. And like I was saying, it's like something like to the people listening. It's just that moment to say like, hey, this can work. Running a business and being an entrepreneur, these things work, but it doesn't come without its challenges, and it doesn't come without its stress. These employees that you're just talking about, the people who've been with you forever, like there's a lot of weight and pressure when people work for you.
Absolutely.
But this can also be super rewarding. And from also just listening to what you're saying about your story about when the market changed for appraisers, it's also not just about chasing the dollar, right? It's you're doing it because you're passionate about the thing, that you're determined to see it to its end. And if you have a good thing and you put a lot of energy and passion behind it, that the money will come, right? Like, so I think there's a real dichotomy to that about people who are coming into any business trying to find a quick buck, right? And I don't know how often that works, but maybe it does for some people. But I think that's where a lot of people start, especially even in real estate investing, is the people who jump in because they're like, I'm going to make $1 million. And some people do it, right? I think the people that do it does not come without loss and pain and difficulty.
I think when they start off with that premise, though, that's a premise to fail, though. Right. I don't think that's the right mindset getting into it. Like, I want to make $1 million, right? I think that's probably the wrong mindset.
But think about it. How many people get into real estate because they see that shiny object syndrome. They see TV. They see all these people. They have suits, nice cars, nice homes, whether it's real or not. But they join because they believe that real estate is going to make them rich.
That's why I want to get into short-term rentals, because 90% of the people that invest in short-term rentals do that, and they have no idea what they're doing.
I love it. But one second, but I want to come back to this for a second. When you started the appraisal company with Mark, what was that thought, right? What it's like, okay, we're going to start a business. Like I said, some people it's like, I'm going to start a business and I'm going to freaking kill it and I'm going to be so rich it's going to be out of control. What went through your mind?
Well,
then?
So we weren't an appraisal company when we started. That's the thing. I talked about this a little bit on the webinar, right. So if anybody heard it, I apologize for retelling the story. But we started out, RMS stands for Realty Management Services, not Rich Mark, whatever. Everyone thinks the R and the M is Rich and Mark. It's not. It's Realty Management Services. So we were a property management company, but as I said earlier, we were both appraisers doing appraisals for another company, and we decided we were getting paid $100 an appraisal from this company. It was called Town and Country Appraisals, and he was just giving us $100. So we decided to go to a bank and say, all right, look, we'll do your appraisals for $175, which was about $100 under the going rate at the time. But we would make $75 more, And this was just to bring in some money while we were trying to grow the property management business, because, when you start a business, it's very hard to pay yourself. And it just kind of took off organically. And one day we looked at each other and said, why don't we just do appraisals? Like, what are we doing here? Like, we're good at it, and that's how it grew. And we really grew the business. I'll be honest with you. We grew the business with a personal touch. This was like emailing appraisals and PDFs and digital cameras. We were using, what's it called? Polaroids, and gluing them to the appraisal.
Polaroids?
Polaroids. Oh yeah. Polaroids.
Wow.
And hand delivering the appraisals to the clients. That was like a special touch that we did. We'd hand deliver, because as we were, doing these appraisals over the state, we would stop by, Mark would be like, I'll drop this appraisal off here, you drop the appraisal off there. So we were hand delivering and building relationships. It was a really big relationship business back then. Unfortunately, it's not as much now. It is with the private hard money lenders. We still have that personal touch because we can. With the banks, we're not allowed to. There's a firewall there. We can't really, we don't get to have that relationship anymore, which kind of stinks for the business a little bit personally. But so that's kind of how we just kind of grew it, and it organically grew that way.
I really want to quickly plug the Alpha U webinar that we just recently put up on our YouTube channel. If you want to watch, listen to Rich. He explains things. We also had Matt Sutera from RMS as well on it. So if you want to give it a listen, go on our YouTube channel, like us. Also check it out, Alpha U webinar series with Rich and Matt.
What's the YouTube channel?
Alpha Funding.
Just youtube.com.
YouTube Alpha Funding.
There you go.
And so what Mike was saying before, and I love how he was talking about, there's probably a lot of people that are W-2s that are listening right now, people that are entrepreneurs at the beginning stage of their investor career or business. And also, at the same time, there's probably a lot of people that are experienced and they're looking for that one little nugget. Another one of our investors, he said this great thing at an event, it was a couple months ago, and he said, if you can just take one thing, sometimes it only takes one person to meet one person or learn one little thing that can literally just catapult you into your career. And a lot of these things, if you are that experienced investor, this also speaks to you. As an appraiser, running an appraisal management company, investors are always, I don't mean to throw you under the bus. I'm an investor myself. You're an investor. Complaining about appraisal values. It's something that whether you're a new investor, if you're experienced, if you've never invested into real estate, it's across the board that
it's not just investors, it's homeowners, it's realtors.
Yeah. So what is this, like, the secret? Like, why are people always getting upset? What are some things that you could help tell some of these investors? Because when they're complaining about values, they're like, it came in low, you're not using this comp. What are those common things that most people just don't get?
Well, I mean, first, you don't just wake up one morning and want to be an appraiser, right? There's schooling that's involved, there's training that's involved, and there's guidelines that we have to follow. You know, we can't just do whatever we want on an appraisal. We can't ignore data. We can't jump areas to find a comp. You know, a lot of times an investor will come, you know, when an appraisal comes in, I hate to use the word underappraised, because if the value is the value, right? It's not underappraised, it's under what you thought it was going to be.
Yeah, it's perception's reality.
Now, I'm not saying that, you know, every appraiser or we're always right. I mean, we're humans. Of course, there could be mistakes. So I always tell them, you know, okay, if you have an issue with the appraisal, we'll certainly look at it, provide us better comps, you know, or explain why the comps we use were not adjusted correctly, whichever that is. Typically what I find is they just pick higher comps in different areas, or that aren't really comparable to the house, that, you know, that aren't better than what we're using. You know, you can't we're a 3,000 square foot colonial, you know, we have a 3,000 square foot colonial a block away. We can't go, you know, a mile away for a 4,000 square foot colonial, because you need the higher value.
So let's break it down, keep it really simple, not just for the experienced investor, but even for the newer investor. I think some common things that, Mike, you've seen over the years, like double yellow lines, right? If you're in a cul-de-sac, or if you have a house that's on a double yellow line,
it's not the same
that's
thing.
not the same thing.
No.
If you have a 3-bedroom home with 2 baths, or you have a 4-bedroom house with 3 bathrooms, those are not similar, even though the square footage might be the same. Right? And there's a lot of things that go into.
If you don't have a pool.
Yeah. So
there's a lot of factors.
If you're in one township,
if
with a zip code
behind your house.
Yeah, you're close to a train track. So I think those are some basic things. And obviously, you know, definitely watch the webinar, listen to that webinar. There's a lot of detail that goes into it. But these are some things that just people sometimes I think they conveniently overlook.
The external factors is a big one that you brought up. Appraisal term, the correct term is external obsolescence, but external obsolescence on an appraisal is a big one, you know, that I don't think a lot of times the investors are really taking into consideration. You know, we did a house for you guys one time. It was on like the corner of like 5 intersections. It was crazy. And,
intersections?
Like there was like 5 streets coming into it, you know, like the 5 points.
Yeah.
You know?
100%.
And yeah, it's not, there's going to be some negative adjustment for that. And if you're comparing it to a home on a cul-de-sac, first of all, you shouldn't, you know. You definitely want to compare it at least to a home on a busy street. But even on a busy street, it's still worse, you know, because it's got...
Right. It's like, I remember an appraisal we did. It was in a really affluent town here in New Jersey, and the house was next to major power lines. It doesn't matter what town you're in or what's going on.
That's it.
Those power lines knocked a heavy price off of the value of that house.
Has to. You know, I mean, a buyer's going to... Now, it will sell. That's one thing I always say. You know, for a little while, I had a commercial appraisal division, which I sold. But the guy that I sold it to, he would always say, there's a lid for every pot. You know, that was always the thing. There's a lid for every pot. So someone will always buy the house. But that doesn't mean that a lid doesn't come with some sort of an adjustment. You know, it's not. It may not sell for as much as the other house, and you know why. And that's what we have to do, right? As appraisers, we have to figure out why. You know, what is that adjustment?
Absolutely. Like I'll tell you. Recently, I had a deal working on for a borrower, and appraisal comes in. Originally, he told me the value was what he thought it was going to be was lower than what it came in at, and I was so excited. Never happens. Not that it never happens, but it's rare. Never happens where it's like, and it was a significant number. I'm like, this guy's gonna love me.
How much was he anticipating, and then what did it come in at?
He thought I was gonna. He wrote down 300 was what I was gonna come in at. It came in at 340. And my head I was blown. I'm like, this guy's gonna love me. Call him up. Hey, bud, guess what? It came in 3. He's like, that's low. I'm like, wait. Whoa. That's not the conversation we had a month ago. But okay. He's like, no, it's gonna be worth should be worth 425. I'm like, that you told me it was going to be. He's like, I don't know what I thought about when I did it, but it is now. So I'm like, okay. So I start the process of explaining to him. Okay. He's like, listen, I just did this, and everybody's got a story about why it's wrong. And I worked on this property, or if you look next door, you do this. I've heard literally every single comment you could have about why it's wrong. So I go, okay, go find me the houses that you think were the ones that should be in here that are give you the value.
425.
So I was like, I'm gonna put your deal on hold. He's like, okay, great, I'll get back to you. 2 weeks later. So I'm gonna go with the value that you sent me, and I'd like to move it along. And I'm like, I didn't even ask any questions because part of me wants to go, so tell me what happened. And I didn't want to do it, but I was like, in my head, I'm like, so tell me what happened. You didn't find a single house that made sense, did you? I was like, okay. But that happens all the time, right? And it's because they don't understand. It's so, I call them Zillow warriors. It's so easy to be a Zillow warrior and just be like, look, that house and this house and that house and that house. And I can't imagine what your job was like before, like Google Maps. Oh, no. I can't imagine it, because when I started doing this and I was learning how to read appraisals on the lender side, that was some of the first things I would look at. Where's the house and where's the comp? Is there train tracks? Is there double yellows? Is there a factory? Like I've seen all kinds of house next to a funeral home.
Yeah.
That might affect the value.
Cemetery. I'd actually take the house by the cemetery over the house next to the funeral home. Yeah. This is hands down. There's no comparison. But I'm going to
pass on both.
But if you had to pick one,
yes.
I'll take the cemetery. But it was like, but it's things like that. And then people would argue. They'd be like, you don't understand this house. I was like, yes, but this house over here, 4 blocks away, is not next to the funeral home. It's not. It's next to another house, and it's really nice. And from your bedroom window, you're going to see the hearse roll in, 4 times a day to the funeral home. It's not as desirable, and
and it gets a little bit of traffic. Funeral homes get just a little bit of traffic.
Yeah, not a lot of foot traffic, but but some traffic. Yeah, wheels.
But it's things like that, and investors, especially more so than homeowners. But and you could tell me a good homeowner story. But I think investors, though, they put the blinders on. They're just like, I know it should be this, and especially now post COVID, there's a lot of it because everyone feels this massive upward trajectory on values because there's limited supply and COVID really pushed up values that they're just like, listen, I don't care what that appraisal says, it's 20% higher. And I'm like, no, it's not. And it probably won't ever be like that ever again. Right. I think that's the other part. Maybe you can talk about that. I think this idea of what happened in the last 4 or 5 years, right before COVID, during COVID, and where we are now, I think people think that's a thing that's going to happen again. Mm-hmm. And unless we all want another global pandemic, I don't think it's ever going to happen again. I think
the opposite would be more probable than that. Yeah. Where values come down.
Right.
For that.
I think the only things that could do again is war. If we have a massive world war, I'm not wishing any of these things.
No.
Another pandemic, something else that tanks the economy, and the people who have a lot of money are able to just buy whatever they want.
Right, and tanking the economy usually follows low interest rates. So.
Right. So I think people who are of this, this train is going to ride forever, and you're the best person to ask about it. That train going into the mid-2000 financial crisis and that train going into COVID, those were both really, really good times. Ooh. Right? And they abruptly came to a stop and then changed, absolutely course corrected into something else. We can't always be in the assumption that everything's always going to be upward trajectory at really, really high. You have to, I always tell borrowers all the time, if your deal doesn't work 10,000, it's always on the margins, the numbers, right? If you're looking at an appraisal, and this is my always favorite thing when I talk to borrowers, if the appraisal is different by $10,000 and your deal doesn't work, it was never going to work in the first place. If your deal is off by $100,000, we just have a problem. But it's like if your deal is
that close,
right? If it can't flex in the margins plus or minus, then it doesn't work. And people chase deals down that shouldn't be chased. And like, I think that's the other part. That's the investor blinders a little bit. Sometimes they're just like, this has to work. It doesn't make sense. I'm telling you it's wrong. And I'm like, that $10,000 is going to make or break your deal. If it's going to break your deal, it's a problem.
I've always wished in the appraisal industry, though, that appraisers didn't give a exact number. I've always felt no one is that good.
Right?
No one is that good. Like, I always feel like it should be a range.
This is an honest answer, right?
No,
This is a really honest answer.
On the front of an appraisal, it has a number. And what is right above it? It says
the opinion.
Opinion.
It's an
of
opinion
value.
market value. Now, obviously it's a professional opinion. I just find it to be too exact. Right. I'll always tell my appraisers when I'm training them. Sometimes they'll come in. The purchase price was like $304,500, and they call it that. I'm like, no, you're not that good. There's no way you know that house worth $304,500. I mean, it's 305. And you'll see all the time appraisers, they come in at the purchase price, right? Magically. I just feel like it should be a range, and I think that the industry would be better in that way. And an example would be like on maybe this isn't on an investment deal, but on just a typical refinance on a house, right? Mm-hmm. We don't know what they need. We have no idea. Right. We're not given that information. We have no idea. If we're off by $10,000, the person can't refinance a house. And $10,000, let's say it's a $700,000 house. It's such a small, that's
right.
That the margin for error there is so small. I think I said on the webinar, if you have 5 appraisers do the same house, they're going to come up with 5 different values. So that alone tells me you should have some sort of a range. The appraiser should give a range.
So why do you think the industry hasn't gone that way? Why has it not gone that way?
I don't know. I honestly don't really know. This is something I've always felt too. I don't know. I just don't think that the banking regulations would allow that.
Having a range.
Yeah, because I think then that would allow the banks to then make business decisions probably, right. and then they're selling the loans, and I think there's just too much that would have to change for that to happen.
But it makes sense.
It makes sense because no one is that good.
I have a question. So you said that you've been through the mid-2000 crisis, the pandemic. First, I just want to preface the fact that when we got through 2020, the pandemic, everybody, I can almost guarantee very few people said that values would go up, but we all anticipated that values would go down. Values spiked up.
I did a webinar. I said values would go down.
Yeah, and I remember my partner David Hansel. He was on a webinar and he was talking about we see about a 10.
We were on the same one.
we see about a 10 to 15% correction. Yeah. Well, it was actually a 10%, 15% upward.
Even more.
Yeah. So what do you see now? We're in a unique time. We're going into an election. We have interest rates in the 6, 7s range. Inflation is pretty stable. What are you seeing right now? Obviously, we have a very low supply across the country in all markets.
It's just a very low supply still. We still see pockets of areas that are appreciating, but not double-digit appreciation anymore. That's over. Marginal depreciation, maybe 5-6% a year we'll see in some areas. Some are flat, and some we even see a little bit of a decline. It really depends. It's really market specific, home specific.
I have a question, and this is a little bit of a curveball question, and you might not know the answer to it.
Okay.
But the deals that you are seeing, because there's such limited supply, are we seeing a lot of distressed assets? Are we seeing a lot of traditional home sales, right? People...
The distressed assets have picked up.
Okay,
for sure. So we do a fair amount there's a company that we work for, that's all they do. Mm-hmm. And we didn't get anything from them for years, and they're back in our flow,
right.
Sending probably 10 to 15 a week.
Right, because I think that's an interesting part of this too, right? It's like, what transactions are happening, right? Is it, I just need a bigger house and I'm going to suck it up and get rid of my 2% rate and move? Is it distressed assets? Is it something, I think that's a really interesting thought to have when you have such constrained supply. Mm-hmm. What are the transactions? So you're saying there's an uptick in distress.
Definitely an uptick in distress. Obviously we do a fair amount of hard money loans, which definitely has been better than it was.
Right.
New construction.
Do you think, are any of those outsized? Do you feel there's so much more new construction or so much more of one or the other?
I would say there's more new construction.
That's really interesting.
Yeah. Well, because a lot of nobody's selling their existing homes, so they have to buy new. I just did. I just moved. I downsized and I bought new. There's nothing on the market to buy.
I'm seeing a lot of that too.
But I feel like that's really interesting.
So it's a lot of first-time home buyers still. Right. There's just such a large majority of the country has low rate interest mortgages. 3%, 4%, 5%, and they're not going to sell to take on that higher debt.
Well, it makes sense then for new construction to be the thing, right?
Yeah.
And I think
unless they have enough equity though to have a big, a small mortgage, then it's not a big deal.
Right. And I think that's the thing for investors to be looking at right now is like, how can you figure out, and I see it myself. And I think some investors are getting a little in above their skis about where they find big tracts of land and want to build 7 homes at a time. It sounds really exciting. That is an undertaking that is not like building infill. That is not like doing a rehab.
You better know what you're doing.
Yeah. There's a lot to that, but I think that's the interesting thing is like, I feel, and I do feel this, and that's why I said it was like a curveball, but I kind of knew the answer. But it was like, I think brand new homes is going to be the thing driving supply for the next 5 years.
I agree.
I don't think until then, election or no election, whoever wins or who doesn't win, I don't think any of that can change the fact that a huge population of this country is in a sub 4% mortgage.
And I also think that's hedging the fact that I think most reasonable people believe that interest rates are going to somewhat stay in this 6-7% range.
Yeah, for 2024, I would.
Yeah,
agree.
I don't see interest rates going into the 5s or
they're
the 4s.
Going to have a 5 in front
they're
of it.
They're not probably going to go into the 8s or the 9s, but you will see some fluctuation. And I think because we're seeing that stability now with interest rates and inflation is pretty stable, we're seeing a lot of this. The big common denominator is supply, and that's where you're seeing a lot of these new housing starts and a lot of new construction.
But those interest rates shouldn't be so scary. The 40-year average and 40 years of mortgages is in the 6s.
Yeah, and I think that's where most
people
are. But when
you couple that with the values of the homes, though,
absolutely,
that's the
values
scary
keep
part.
going
So I
up.
bought the house I just recently sold. I bought in 2005, and I paid paid 1 point to lock in 6 3/4 when I bought the house because I was new construction. And that I paid that point to lock in that 6 3/4 rate. So to your point, I mean that was 2005.
Right. But yes, values are now very skewed vis-a-vis rates, but the rate itself isn't.
No, it's not exorbitant.
It's not but I think the problem is if you have a 3% mortgage, a 6% rate is double.
Yes.
Yeah.
So that's the
that's where
really
more than 50% of the mortgages out there are under 6%.
Yeah.
More than 50% of all the homes that are out there have mortgages that are under 6%. So why would you?
I went from a 2 3/4 mortgage to a 7% mortgage.
But this was you made that decision.
Yeah, well, I did it because I also had a lot of equity in my home, so my mortgage is small. I only have a very small mortgage amount. So if you can lower the mortgage amount, to offset the rate, it's not a big deal.
I also think the world has short-term memory, right? Like for all of us, I'm sure I'm going to say this and you're going to make sense. If you bought a house in the 70s or 80s, there is a good chance that your rate was double digits.
Absolutely. I think my parents were like 18%.
Yeah, 15 or more, I think.
My dad got it at 14 because he got on the GI Bill. Yeah. He bought a house and they got it at 14. So we all have this short-term, goldfish memory, right? Where it's like, this is insane. This is crazy. And it's like, it's not. Like what we're seeing is we're moving back towards normal. There's
2% is crazy.
Yeah.
That was crazy.
Absolutely.
Yeah. That will never happen again.
And that's why we have inflation through the roof.
What is, in your 25 years, we went out to lunch recently over the last couple of months, and we were just kind of round table. We were chit-chatting, talking shop. I want to know, and if you could share, what was the craziest thing you could think of that you have seen?
Whoa. Is it different than the building with this company burning down and his father being in the hospital and then a week later the financial crisis?
Aside from that,
can we top that?
Yeah, in your 25 years, if you can conjure up what is the craziest story that you could think of in your 25-year career as an appraiser? What comes to mind?
I have a few.
Okay.
All right. First two didn't. I was not at.
This is, by the way, this is story time with Rich Domanico.
I'll save the one that I was involved in. So Kevin, one of my appraisers, Kevin, he went to do an appraisal. I don't remember the town, but I think it was Newark, and there was a dead body in the house. So we have a dead body. Yep. And then Doug, who you said has a lot of good stories, he rolled up to a house where a woman was defecating on her front lawn as he pulled in. Yep.
Does that affect the value of the home?
Personal property, there's no bearing on an appraisal. So mine was, I was doing an appraisal in Plainfield. This is years and years ago, probably early 2000s. And so whenever I would do an appraisal, I would always, my system was always, I would always do a lap around the house to see the house. So I'd get my bearings, I got to look at the house. So as I'm walking along the side of the house, there's a pit bull chained to a tree. But I didn't know it was chained to the tree at the time. It just came running at me, and I was like, "Oh my god!" But then, the chain stopped it, so I was like, "Oh!" Like my heart stopped. So then I start walking to the backyard, and now the house behind the fence that was supposed to be there was down. It was like down, and there was a guy with an axe chopping a tree down. And he said to me, he said, "Hey, be careful! That pit bull's loose." I'm like, "No, it's not loose. It's tied to the tree." And he's like, "Yeah, that one is. That one's not." And here comes this pit bull, right? I ran as fast as I could where the fence used to be, right down. I have my clipboard in one hand, my tape measure in the other, and I am running as fast as I can until I realized that the dog's not chasing me. And I turn around, there's no dog chasing me. So I'm like, oh my God. So now I have to go back to the house. Well, the guy with the axe somehow had the pit bull calm down with the axe. Like, I don't know how he did it. So now I'm like, oh, I have to do this appraisal. So you have to go in the basement, and there's Bilko doors to the basement, and it's pitch black. I'm like, I'm not going down there. I'm going to go down there. The dog's going to follow me, and I'm never coming out. So I'm like, you know what? I can't do this appraisal. So now I'm leaving. I'm going to call the bank, tell them, there's a loose pit bull here. I can't do the appraisal. Sorry. Right. And there's kids on the porch, three or four kids, and they're like, what's the matter? Are you scared of the little doggy? And I said, yep. Got in the car, left. Said, yeah, that one's not worth it.
I mean, that stands out in your mind because it was you. I think the dead body.
The dead body.
Is what was that phone call like?
So the phone call went to Matt. So I didn't get the phone call, but yeah, they had to call the cops. He got questioned. It was.
Did you find the body, or did you create the body?
I think the body was there for a while, so I think he was fine.
Yeah, but even still, that's a great conversation. Rich, you got to tell them the other appraisals I was scheduled to do can't do them right now. Make it. I'm getting questioned about whether or not I killed the person who this dead body is.
I also had one of my appraisers. This is a sad story, actually, but the way it went down was pretty crazy. I had an appraiser that worked for me, and his wife called me up. He had an appointment. His wife called me up, and he said, "Look, Dan was doing work in the yard, and he collapsed. He's not going to make it. He didn't make it." I said, "No problem." I'm like, we'll reschedule it. He's like, no, he's dead. He didn't make it. I'm like, what? Like that literally happened on the phone. I didn't no idea what to say.
I don't know what you can say.
Yeah, it was horrible.
Whew. I mean, I'll just share this one because it's a Doug story, because Doug told it to me, because I called him up once because I was like,
tell me some stories.
No, we had a borrower who really needed, it was in Patterson, and we had a borrower who really needed this appraisal done. And he's like, I get the report and it's like missing the second floor. Yeah. And it's a 4-unit building. And I'm like, Doug, I can't do this without the other units. Like, gotta see what they're doing. He's like, I can't do that. I'm like, what's wrong? He's like, there's no floor. I'm like, what do you mean? He's like, yeah, you walk up the stairs and then I can see downstairs. And he's like, look at picture 4. And I'm looking at it. I'm like, so that's the second floor through the ceiling? He's like, yes. And I'm like, where are you? What is happening? But he was like, yeah, if I can't take any pictures of something where there's literally no floor. And then he sent me a picture that he took that wasn't in the appraisal, which was of a toilet standing up with a pipe.
Oh my God.
It was like just like hanging out on the second floor by itself. I don't know what happened to this house. On both sides, how'd the floor fall?
I have no idea.
I have no idea either.
I mean, maybe the floor joists were rotted and they took it down to redo
No, it didn't look like that, because it looked like the floor collapsed.
There was a floor, like in a regular unit that was being occupied on that first floor, or was this vacant?
Yeah. No, people lived in the first floor.
Lived in the first. It was,
But there's just no ceiling, which would be...
and there's stairs. It was going.
it was like a Soho look.
Yeah. So it was a side by side. So it was like 2 units on the right, 2 units on the left, and stairs up the middle. Right. So when you walked up the middle stairs and you got to the top, there was no floor. And when you looked left, there was nothingness. And when you looked right, there was a toilet. And when you looked down, it was the unit on the right and the unit on the left.
Interesting.
It was amazing. But hey, that's my story, and I'm not even an appraiser.
Did you loan on it?
No.
No. Rich, if you could touch on, you were talking about how you're starting to invest in short-term vacation rentals. Why? How? What are you if you could just talk more on it.
Sure. Right now we have 2 properties, one in Sedona, one in Naples. We're under contract for a third in Scottsdale. We just think it's like an asset class or a new asset class, basically, that has no institutional money really involved in it, has a lot of inexperienced people buying these properties. Everyone thinks, like you said earlier, how everyone just wants to make a quick buck. They think they'll just throw the house on Airbnb, and they don't really know what they're doing. So I think we have a competitive advantage from that aspect. We're kind of focusing on more higher end luxury homes. Although we're pivoting off super high-end luxury, just because it's hard to hit the revenue numbers you need to cash flow on those properties. But, we're still looking sort of on the high end, focusing on vacation areas mainly, that have a lot of traffic, that have a lot of demand. We do our research on regulations, though, because that's a big thing. We don't want to buy a property that, they're going to come in with the regulations and say it can't be a short-term rental. So we like to go in areas where the regulations kind of already happened. But we won't shy away from an area that isn't, or maybe where there's only a few licenses, because those licenses become more valuable. But I think the biggest advantage we have is we know real estate, right? So I'm going to buy the home at a good basis, because that's what I do. That's what I know. I'm not going to overpay for a home. So if it, for some reason, doesn't work as a short-term rental, at least I know the asset is still worth it. The value is still there. So we're not just buying it based off of the income, the revenue stream.
Yeah.
What's the most interesting thing that you've discovered about short-term rentals that you didn't realize going in?
Oh my God. Pretty much. I have to be honest with you. When we first went, I went to a conference in last January, and I didn't know anything. And it's all acronyms. So they're sitting in there, and it's acronym after acronym after acronym. I'm writing down all these acronyms. I'm like, I have no idea what they're talking about. I didn't even know what STR stood for, short-term rental. I didn't know, they're everything. So I would say the operations of it is what, you really have to learn and know. There's so much that goes into operating these. A lot of, I said earlier how title, everything, you all kind of do the same thing. Well, with short-term rentals, they're all trying to do the same thing. But what can you do to differentiate yourself to stand out? And that's usually operational. That's what's going to make that happen. What are the amenities that you could add to the homes to make them stand out? I'm sure you guys have all got houses on Airbnb or Vrbo or wherever in your life. What do? You look at the pictures, right? That's the first thing you do. So what can you put in your pictures to make them stand out? And then what experience can you provide to your guests to make them want to come back and leave a 5-star review? Because that's really what
operation and marketing.
It's an experience. You're selling an experience. You're not just selling the house. You're selling an experience.
People buy an emotion.
I feel like that's so different than like traditional real estate where you're.
Oh, it's completely different from that.
Going for the house. No, here
it's a business. It's not just there's the business end of it, and then there's the real estate end of it.
Also, I really want to just touch on, I know you are a fitness fanatic. As anyone knows who's listening to this podcast, I am also a personal trainer. I started with Alpha 8 years ago. You love fitness. What is it? I know obviously you used the word passion when we first started, and we're going to wrap up here soon. What makes you so excited about fitness and working out? Why does it speak to you, and why are you so into it?
So I wasn't always.
Really?
But yeah. So when I've been married for 23 years. I think when I met my wife, she was a runner. She still runs. And she's like, oh, let's go to the track and run. I couldn't run once around the track. Like literally one time around the track, I was out of breath. And I don't remember the year. I want to say mid-2000s. One of my good friends did a race called the Men's Health Urban Athlon. It's not around anymore. It was in New York City. And after the race, he had a dinner. I went to the dinner. And he said, oh, I'm going to do one in Chicago in like 6 months. You should do it with me. I said, I can't do that. It was like a 9-mile run with obstacles. I'm like, I can't do that. There's no way. He's like, you definitely can. Just train. So I did. I trained for it. I did it. I did well. And I just got the bug from there, and I was hooked. And then I started doing Spartan races, Tough Mudders, countless mud runs, all sorts of different fitness races. I just like it because you could challenge yourself. You could challenge yourself against other people in your age group, which I also liked. You know, I never won a race, but I would always try to beat my time, you know, my previous time. And I ran the New York City Marathon.
Wow.
Yeah. So
Are you still doing these types of races? Or
so
are you kind of on pause?
I'm not. I still very much into the race. I mean, the fitness end of it. I don't do many races anymore, more because my shoulders are just shot. I have arthritis in both shoulders. I need 2 new shoulders. So the races became a little difficult for me to do. But yeah, I still work out, you know, every day.
Fantastic.
All right. Yeah, if you go on RMS's website, you can see where you look at Meet the Team. You can see Rich and his bulging biceps. I definitely wouldn't want to get on your bad side.
RMSTA.com. Go to the About Me and go to the team, and you'll see exactly what Matt's talking about.
Yeah. Well, Rich, thank you so much for coming on here today. I couldn't have come up with a better episode to kick off the season.
Absolutely.
And Rich, it's been an absolute pleasure having you on here today.
Thanks for having me, fellas.
Absolutely. And again, back to go backwards, check out the Alpha Funding YouTube for our webinar with Rich Domanico and Matt Sutera from RMS. They go into a whole lot more detail and technical pieces about appraisals that for any investor and anybody who's just curious about how this all works. So much good stuff there on our webinar. So make sure you go check that out.
Thank you, everyone.
Thanks.
Thank you for listening to another episode of the Mike and Matt Show. We hope you enjoyed the episode. Please subscribe, follow, like, and comment on whatever podcast platform you listen to all of your favorite podcasts. If you have a guest that you would like to see on the show or have a topic that you would like to hear covered, please email us at podcast@alphafunding.com. Again, I'm your host, Matt Weber, and my partner, Michael Strasser. Be the best version of yourself and take action. Life is meant to be explored. Be great, friends.